Hey guys, it's Brian. Welcome to Financial Fitness. If you're new to the channel and want to hear more about personal finance and worth the money videos, please subscribe. In this video, I'm going to be reviewing even more frequently asked questions on wash sales from viewers and subscribers that I've gotten since my last wash sale video. This is a follow-up to my two other videos on how to avoid wash sales and how to remove wash sales, which I'll link at the end of the video and as a pinned comment. If you haven't seen those two yet, please check them out. Thanks to everyone that has left comments and questions, because without them, this video wouldn't have been possible. I do read them and respond, so feel free to ask a wash sale question if it's something I haven't already covered or you're just not sure about it. Also, I appreciate those that have been watching my other videos in addition to hitting the like button and subscribing. It really helps the channel grow. So let's get into answering your questions. For this first question, I'm sure most people watching are wondering this after finding out they've gotten a wash sale or while getting ready to file their taxes. Why does the wash sale rule exist? The reason that the wash sale rule exists is basically because otherwise investors would keep selling at a loss to realize their losses for tax purposes and then average down by repurchasing the same stock back cheaper with no consequences. The requirement for waiting 30 days before or after selling at a loss is what prevents an investor from taking advantage of a potential tax loophole, at least as far as the IRS is concerned. The short answer is that the wash sale rule is in place to prevent investors from realizing huge losses and still buying or owning the same stock within a short period of time. Does holding a stock with the wash sale for over 1 year and still selling at a loss help with taxes? When a loss is realized with or without a wash sale, those losses can be used to offset gains from other trades throughout the same calendar year, regardless of whether it was held long-term or short-term by using tax loss harvesting. My video on tax loss harvesting explains how that works in detail. Please check that out if you want to learn more about offsetting gains and losses for tax purposes. But overall, they can help with taxes potentially. If you have two different brokerage accounts, what can you do about wash sales? Each brokerage account between different brokers cannot recognize wash sales. Even two separate accounts within the same broker would not recognize wash sales between each other most of the time. If you're in this situation where you have multiple accounts with the same broker, you can call them and ask if they support wash sales between each other, but they most likely will not. In all scenarios, you should keep track of them yourself and work with your accountant or CPA to reconcile your taxes and any wash sales between your brokerage accounts. If you have a wash sale, can you recover the loss? Stock trades executed in a calendar year can only impact that tax year. So for example, trades executed in 2021 can only impact 2021 taxes. Trades in 2022 can only impact 2022 taxes. The only exception to this is hypothetically if there was a stock that was sold at a loss in December 2021, and then in January of the following year in 2022, a repurchase is made within 30 days that triggers a wash sale. Then that would disallow the loss from being realized for the previous 2021 calendar year taxes. The next two questions are related, so I'll answer them together. How do you count the 30-day clock? Is the 30-day clock calendar days or business days? The 30-day clock is calendar days, not business days. And as for how you count the 30 days, since now you know it's by calendar days, day 1 is the day after the trade is made. So let's walk through an example given by a subscriber. If a stock purchase was executed on April 1, 2022, and then it was sold on April 2nd, 2022 at a profit, this would not have a wash sale impact. But then the next day on April 3rd, the same stock was purchased and then sold on April 4th for a loss. The 30 days would start counting from April 4th. April 5th would count as day 1 and then counting out 30 days. Day 31, which would be the first day to be able to repurchase the same stock without triggering a wash sale, would be May 5th, 2022. At this point, after waiting out 30 days, the loss would have been realized, which is why the wash sale would not impact the next trade on that stock starting on May 5th. Keep in mind there is no need to jump right back into the stock after waiting out the 30 days, especially if something substantial about the company changed during that time. What happens if you have a lot of wash sales to keep track of? Is there an efficient way to keep track of your wash sales? Does Form 1099 from your broker adjust the cost basis? It's best to keep track of your own trades separate from the 1099 that your broker provides at the end of a calendar year to manually keep track of your wash sales if you have them throughout any particular year and for your own performance tracking. The 1099 does typically give a breakdown of your trades and also a few line items that summarize gains and losses by long or short term. It will also list disallowed losses, which are wash sales. Do you get taxed on gains and losses? This question I've gotten more frequently than I would have expected, but you only get taxed on realized gains. However, there can be instances where you could get taxed on gains you did not have because of unexpected wash sales. I recommend you check your trade activity with your broker to make sure your trades get executed properly. It also helps with being able to see unexpected wash sales or share designation not being properly allocated sooner. How does the timing between buying and selling different bunches of shares impact wash sales on stocks? So in this question from one of my subscribers, where all shares of a stock were sold, some of which are at a loss and were purchased very far apart from each other. So let's walk through this example. In January of 2021, 20 shares of stock X are purchased at $113 per share. Then in January 2022, 825 shares of the same stock are purchased at $59 per share. Later that same day, all 845 shares are sold at $62, but 20 shares were actually sold at a loss. The timing between when the most recent bunch was purchased and when shares are sold at a loss is less than 30 days, which is what caused the wash sale of about $1,020. The 30-day clock needs to be considered in order to avoid wash sales. Also, do not think about average cost per share when it comes to trading. Average cost per share is something that gets a lot of investors when it comes to wash sales. Even though overall you may have made a profit, that still means some shares may lose some money, and that's where a potential wash sale could become a bit of a surprise. If you wait 31 days, does that get rid of a wash sale, or does it become part of your taxes anyway? If you wait out 30 days after selling at a loss without repurchasing, that realizes the loss for your taxes. The next purchase on the same stock after waiting 30 days would not be impacted by a wash sale. Wash sales would still be listed on your 1099 that you receive from your broker under disallowed losses. Does selling a stock below the wash sale adjusted cost basis cause a 30-day clock to start in order to realize a loss? Any trade that is being sold at a loss with or without a wash sale adjustment still requires waiting out 30 days in order to realize the loss. Once you have a wash sale on shares that you hold, it becomes more and more difficult to either break even or make a profit on the position since it increases your cost basis. This is especially true if you've had multiple wash sales on the same stock within a short period of time. But if you happen to escape and make a small profit, be happy that you got out and removed the wash sale for the next trade on that stock or ETF, because it often does not work out that way. What happens if you hold a stock with a wash sale long term? This is a great question, and holding a stock with a wash sale over 1 year or longer does not get rid of the wash sale. In this example from my subscriber, a $60 loss had occurred the day before repurchasing the stock back. Once repurchased, the next day this triggered a $60 wash sale in addition to the cost basis of $150, which made the wash sale adjusted cost basis $210. If that position were to be held long term, that $60 wash sale would be carried into the future until the calendar year that it is eventually sold and realized as either a gain or a loss. Is there anything an accountant can do to help reconcile wash sale related taxes after the calendar year has ended? Unfortunately, I'm not aware of what an accountant can really do in this case when the trades and wash sales have already happened and the calendar year has ended. Any trade decisions or actions would have had to happen during that specific calendar year. If there is anything you find out an accountant can do, please let me know in the comments. How can a broker tell which bunch of shares you intend to sell if you own multiple bunches of the same stock? Most brokers default to FIFO or first in, first out unless you specify a different default setting like LIFO, last in, first out. LIFO can be helpful if you have stocks that you hold long term and occasionally trade short term also. I suggest checking that setting with your broker or online, especially if you found out unexpectedly that the wrong bunch of shares were sold in the past after the settlement period. During the settlement period, which is known as T+2 or the trade date plus 2 days, this can be set manually by you through share designation or in some cases, reassigned lots depending on the broker. Most examples of wash sales illustrate within 30 days after selling at a loss and repurchasing, which triggers a wash sale. Can you provide an example of buying before instead of buying after where a wash sale could be triggered? This is both a good point and a great question raised by my subscriber. Here is an example I came up with to illustrate this scenario. Buy 100 shares of stock X on March 2nd at $25. Buy 100 shares of stock X on March 15th at $20. Sell 100 shares of stock X on March 30 at $18. In this scenario, selling either bunch of 100 shares on March 30 would be at a loss, but the loss would trigger a wash sale since both purchases are within 30 days of March 30. Try to avoid buying multiple bunches of shares unless it's at a much lower price than your initial shares purchased. This will help with potentially causing fewer wash sales in general and will be easier to keep track of for yourself and your taxes. Can wash sales be deferred and claimed later? Wash sales cannot be deferred and claimed later unless the stock position with the wash sale adjustment is held into the future into the following calendar year or later. I really hope I was able to answer most of the questions you might have had, especially if you made it through all the questions in this video and my 2 other videos on wash sales. If you have another question or a specific scenario you'd like to share, please leave it as a comment. Your question and comment could help others with similar questions in the future. Please check out my first 2 wash sale videos if you haven't already, how to avoid wash sales and how to remove wash sales. Also, please check out my video on tax loss harvesting as well, since that goes hand in hand with wash sales on occasion. Thanks so much for watching. I hope you liked this video and found it insightful. Click the like button if you did, and please subscribe if you haven't already. Click the notification bell so you can see when I post videos next. Feel free to leave comments, questions, and any topics you might want to hear about in future videos to get on track to being financially fit. See you in the next video.